Guess before you invest. Watch Mad Money with Jim Cramer. Tonight, knowing when to hold 'em or fold 'em. Cramer's award for the banker who's playing all his cards right. CNBC tonight.
In today's Sector Scope, let's take a look at the U.S. refiners. The big names in this sector all higher despite a downgrade by BMO Capital Markets, which is cutting Marathon Oil, Valero, Tesoro, Frontier, and Holly Corporation. Pete Nigerian and Joe Terranova, both experienced oil traders, turned for the first time very bullish on the refiners themselves last night on Fast Money. The analyst at BMO citing declining margins, which have resulted from higher oil prices and rising gasoline inventories, as well as a slowing U.S. economy. The traders suggesting that may have peaked and may start to reverse. BMO predicting that refining margins will average $11.70 a barrel as a percentage, down from 15% in its previous estimates. Maria.
Dylan, housing data today from the Commerce Department showing a less than expected 0.6 of a decline in housing starts. Now, some say it may be a sign of a recovery coming. Is the devil in the details? Mike Larson is a housing analyst with Weiss Research. Fred Glick is CEO of mortgage broker U.S. Loans Mortgage. Gentlemen, nice to have you on the program. Welcome to the Closing Bell.
Thank you.
Fred, let me kick it off with you. Have we seen the worst in housing?
Well, I got to tell you, and this is the new construction numbers, it looks like in the West it's a little bit positive, and that's probably because of the luxury market around L.A. is still doing good for billionaires. Back East, it's pretty lousy. And I think you're still seeing some price declines, but you're also seeing a little bit of buyer activity because they're saying, well, maybe this is the number. But the biggest problem is that it's getting tougher and tougher every day to get a mortgage out there.
Right, and that's certainly evident, this tight lending environment. Fred, what, in your view, are the main obstacles right now in terms of, from the mortgage lending side, in order to actually watch a recovery take hold or at least begin?
Well, the biggest problem is the Freddie Mac and Fannie Mae guidelines are basically saying you got to put a lot of down payment. And if you don't have a lot of down payment, you can go to an FHA loan, but I see FHA getting tighter with their guidelines. And the people who are putting money down, they also have to have fantastic credit scores. Freddie Mac just instituted a guideline that says if you are over 60% loan to value, you pay extra if you don't have a 740 credit score, which is a phenomenal credit score that most people don't have. So the payments are going to go up, even though the rates are coming down a little. And it's just getting tighter and tighter. It's just driving people nuts.
Mike, you said something interesting, and it's a trend that we keep hearing. We had a lot of people on yesterday who said something similar, which was the rich end of the market is doing fine. You've got, in London, $100 million homes, $50 million homes are on the market and being sold in New York. You've got $20 million townhouses. What will it take, in your view, for that area to get impacted from what we're seeing in the rest of the country and in the other demographics that we talk about? Or is it just, insulated?
Well, I think a lot depends on the fact that those types of buyers are usually cash buyers, or they're certainly not subprime credit buyers, so they don't need to worry so much about what's going on in the mortgage market. If we continue to see problems on Wall Street and things of that nature, we would probably see some of the high-end market weaken, especially in places like New York. I think the Fed is obviously targeting the average home buyer with some of the things they've been doing lately, whether it's these liquidity measures for the mortgage market, whether it's things like today's interest rate cut. Those are targeted at the lower end of the market, and they're really pulling out all the stops here.
Isn't it true, though, that we really do need some help in terms of raising the jumbo mortgage limits for Fannie and Freddie? Everybody we speak with continues to point to Fannie and Freddie as one of the most important parts of this story. Do you think we'll see a change there?
Well, we've already seen a change where they're going to go up temporarily to the end of the year right now. But the biggest problem is over 417, it's not the same rules as under 417. So the headline looks great. But the reality is, with what they call a jumbo conforming loan, which is a pretty silly name to begin with, you have to have 10% down for a fixed rate. Your credit score has to be at least 720. And then to do an ARM, you got to put 20% down. Your credit score can be 660. You can't do a cash out refi to take out money to help stimulate the economy. So what has to really happen is that Freddie and Fannie have to do the 417 guidelines and put them up to the 7-something guidelines to make this really work. But the biggest problem is liquidity. They have nobody to sell the loans to right now. That's
Right.
their biggest problem.
And Fred, final question here. You know, I'm asking a lot of our guests, you know, what else needs to be done? Clearly, the Fed has indicated it's there with all of the liquidity injected and the extraordinary moves over the weekends. What can be done to put some liquidity and ease of this tight environment in the housing market specifically? Is there anything specific that could be done there?
Well, really, it's all about the down payment allowances, and maybe we can go back to grants, even federal grants for 10 or 20% down for people that are payable after 10 years. There's got to be something. People got to put their heads together and figure something out. I guess I knew I'd be Fed chairman, so.
Gentlemen, we'll leave it there. Good to have you on the program. Thanks so much.
Thank you.
We'll see you soon.
And again, were it not for the obvious conversation between the Federal Reserve and and the Bear Stearns and the rest of it, this would be our lead story. IPO history may well be created this evening. Visa going public in what could be the largest initial public offering of all time. Pricing tonight. Find out just how big it's going to be and how it compares to the previous record holder and what it says as a referendum on the capital markets when we come back.